Warren Buffett once said, "Only when the tide goes out do you discover who's been swimming naked." Well, the tide is going out in Florida, fast, and the real estate market is starting to reveal some ugly truths that could soon hit the entire country. The Florida housing market is crashing, and now signs of this crisis spreading across the country are just too obvious to ignore. If anyone still thinks things are fine, they're simply turning a blind eye to the facts. Today, I'm going to show you real proof that Florida is falling fast and what that means for the rest of the US. But before we dive in, let's quickly talk about why Florida matters so much in real estate. Back in 2008, the massive housing crash started right here. That wasn't just a coincidence. As prices fell, Miami became a warning signal to the entire country, giving us a sneak peek into what would soon hit in 2009, 2010, and 2011. And now, the same exact pattern is starting again, in almost the same spot. Just like before, it might look like it's only happening in Florida, but this crash is likely creeping into other parts of the US right now, whether people realize it or not. As the national real estate market slows down, we'll begin by zooming in on Florida's Gulf Coast, specifically Fort Myers. Here, we can clearly see the signs of a real crash. In 2020, the average home in Fort Myers cost around $230,000, and with mortgage rates at about 3.2%, monthly payments were about $1,300, including insurance, HOA fees, and taxes. All in. Then came the pandemic, and everything changed. Prices exploded in Florida, climbing faster than we'd ever seen before. A massive housing bubble formed. Within just 2 years, that bubble got its first real test. Prices dipped in early 2023, and for a moment, it looked like a crash was underway. But, just like the stock market, home prices refused to drop any further. Instead, they stayed stuck in a sideways pattern through most of last year. By early this year, that same $230,000 home had jumped to $417,000. Monthly payments? Around $30,100. That's more than double. It makes 2020 feel like it was a lifetime ago. Then, something surprising happened. While markets in the Northeast and Midwest kept heating up, home prices in Fort Myers started falling. It became one of the few places in the country with visible declines. According to Zillow, since January 2024, single-family homes in the area have lost about $30,000 in value, a 7% drop. That may not sound huge, but in housing, once prices start to drop, they tend to keep dropping. It's like a chain reaction. Real estate markets are emotional. Once the momentum starts, it's hard to stop. People panic, prices fall more, and buyers back out. For the last 15 years, home prices were mostly controlled by interest rates. Lower rates meant more buyers, more demand, and higher prices. But now, for the first time since 2008, other parts of the economy, like jobs and wages, are starting to hurt the market too. We can already see the signs. Just look at homebuilder stocks. Take Lennar, for example, the second largest homebuilder in the country. Since September 2024, its stock has dropped 42%. That's a bigger drop than what we saw in 2020 when the whole world was shutting down. Outside of 2008, this kind of fall is unheard of. This isn't just a stock move. It shows how nervous investors are. It's proof that something big is shifting. And now, with new tariffs hitting the global economy, things are getting worse. It's like hitting the reset button on the entire system. The pain is already showing in the markets, but this might just be the beginning. We haven't even seen the full impact in company earnings yet. That's when the damage will really become clear. With a 125% tariff on Chinese goods, a 19% drop in the S&P 500 could easily turn into a 40% crash. And with that, massive layoffs and rising unemployment are almost guaranteed. And if that happens, tech analyst Dan Ives described it best. He called it economic Armageddon. Let's take a quick listen to what he said, because he nails how serious this really is.
I'd say, look, in 25 years going through, when you think about dot-com bubble, burst, financial crisis, COVID lows. So, I've seen every type of crisis there is. I think it's the most absurd thing that I've seen in terms of those 25 years. And I think it's an economic Armageddon that's coming our way. And I think it could ultimately set U.S. tech back many years. And that's the thing that a lot of people don't understand. Talking to executives around the world the last 48, 72 hours is that I don't think a lot of tech companies are going to give guidance in terms of 1Q. And I think baked in here is already called 5, 10% cuts off the bat in terms of growth. If this stays, it ultimately, look, this becomes a black swan event. You're playing with third rail issue here.
Is that priced into these stocks if we see this kind of magnitude of decline hold today?
No, because like obviously with China, they're not going to lay down. So
right, they've said this morning 34% tariffs right back on U.S.
Of course.
goods.
And then I think it also comes down to like the tariff chart, which continues to be a sci-fi, sort of comedy show. Those are not the right tariffs. So it starts with like, what's the number you actually even start with in terms of negotiations? And the longer this stays on, you can't stop a snowball once it starts. So the point is like, do you burn the house down, but you still have a bagel in the toaster oven at the end of the day? And I think that's the frustrating thing right now for tech investors. Stocks are not Republican or Democrat. They speak volumes to what they're showing you, and I think that's the problem.
But wait, this video is about housing, specifically in Florida. So why talk about tariffs or the stock market? It's simple. Even before the tariff drama, Florida's housing market was already showing signs of trouble. Prices were falling, inventory was building up, and that was during an economic boom. Now add job losses, inflation, and recession fears, and you've got the recipe for another 2008. It usually starts with one state, then it spreads, the mood shifts, buyers pull back, sellers panic, and suddenly, the whole country's housing market is in trouble. And if you want to see how investors are thinking, just look at homebuilder stocks again. Forget permits or price charts. No indicator is more honest than Wall Street sentiment. Take Lennar again. Their most recent earnings call showed exactly what's going on. Keep in mind, this was before the latest round of crazy tariffs. Even then, the company admitted that things were already falling apart. Listen to this one quote. Across the housing landscape, actual demand has slowed materially as affordability and credit remain challenged by limited down payment funds and high personal debt levels. More recently, even consumer confidence in job security has been called into question, further straining the desire and ability to transact. Even if mortgage rates come down, people are too broke, too in debt, and too scared to buy home. Now throw a market crash on top of that, total collapse, and Florida is ground zero. That's a huge red flag. So here's what we're looking at. Real price drops in Florida, a crumbling global economy, rising fear in markets, and slowing demand everywhere. You can probably guess what happens next. Thanks for watching. If you found this helpful, hit the like and subscribe buttons, and drop a comment below. Let me know what you're seeing on the ground in Florida right now.